Hello, this is Michael Harris of Price Action Lab blog. This is the third video in a three-part series about using DLPAL DQ software to identify price action anomalies and outliers. In the first video, we created a scan workspace and we used that with 32 ETFs to identify price action anomalies and outliers. In the second video, we analyzed the results. We did a portfolio backtest to validate the statistical significance. We identified one price action anomaly in an ETF, and in this video we will look at the returns and discuss some other options of the program. So these were the results, and we identified the anomaly in XLE as statistical significant. The program has a function to calculate the next day returns. We see here that the next day from open to close, the short-term price action anomaly for a short XLE generated a return of 2.1% from open to close. You can also account for stops if you like. Of course, it will be a target of 1.5% equal to the target that was used to classify this particular anomaly. And also you can show the returns from close to close and also without the target and stops. This is a useful function for looking at the next day returns, and I just want to say here that this anomaly turned out to be profitable, but this is not always the case. With validation and statistical significance, we look at ensembles, ensemble statistics. However, the trades are taking place in the time domain, and always the next trade can be a loser, although the anomaly or outlier has high statistical significance. So this was a good example. There are also bad examples. Just show you a good example to demonstrate the use of the software. We're going to see here that from the results there are some useful functions. For instance, you can calculate, you can generate automatically code. This example of Python code for the old Quantopian platform, and you can generate TradeStation code, the 2009 and the current version, also NinjaTrader 7 and 8, also AMI Broker code. There are some other functions. You can add anomalies to signal tracking, and then on a daily you can see if there are signals generated, and you can add them to a database if you like. So these are some useful functions from the results, and also the program has options, so you can convert files, you can do file maintenance, and you can test data files for integrity. For instance, here we find no errors with the 32 ETFs we used. We have a win rate calculator, for instance, for profit factor 2 and for target and stop of 1. The win rate is, let me repeat this, is 66.7%. You can also adjust it for trading friction approximately, and it will be 72.7%. And There are other options like price series position size calculator for a traded capital of $10,000, for example, and a risk of 2%, and you have a 2% stop loss, so and an entry price of $10. You can calculate the number of shares you can buy for those, and we also have a price series statistics. For instance, for Apple, you can calculate some useful price series statistics, and you can use those to estimate the appropriate target and stop loss levels. And also there is a random trading simulator. This is very useful for testing significance of anomalies. Also, the program has help online, and you can find useful information and many examples about the program functions. And this is about it. These 3 videos are very useful for those who would like to have an idea of what a DLPAL DQ does. Basically, this is a program to identify short-term price action anomalies in market data, and it's useful to short-term traders and also option traders, and especially those day options traders, because of the next open to close identification of anomalies this particular program does. Thank you for watching. Have a nice day.